Good afternoon, everybody. Today I wanted to give y'all an update about the market, some of the pros about the market, and then some of the cons about the market and what some things that may concern me right now in terms of where we are in this AI boom. But without further ado, I'll just go ahead and jump right into it. Check this out. So one of the pros is that about 84% of companies have beat their earnings expectations for this quarter. This is big because if companies' earnings are typically trending in the right direction, then the market will typically continue to follow. So that's a very strong point, one of the pros. The second thing is that there's strong momentum from semiconductor sector as well as just the whole AI boom in general. And we'll talk more about that here in a second. Now, let's get into some of the cons, some of the things that concern me about the market. Right now, what you can see is this is the 2-year Treasury yield right here. It's important to understand the relationship that the bond market has because the bond market is far larger than the stock market, as well as these rates dictate what will happen in the short term as well as in the long term. But the thing that concerns me here is the short-term Treasury yield right now is sitting at about 4.12%. This implies that the stock market or the bond market realizes that there is a strong potential for a rate hike in the future. And currently the Fed funds rate sits at about 3.5 to 3.75. So there is quite a bit of a gap, almost a 50 basis points gap in where we sit right now to what the market or what the bond market or the 2-year yield is expecting in the future. The other thing that I'll point out is this, inflation. Some economists are anticipating that inflation may top out at 6% by the end of the second quarter here. So this is very concerning because back in 2022, going into 2022, the market had a really big correction, about a 20% decline because inflation had peaked at about 9%, and therefore that led to the Federal Reserve having to hike interest rates up to about 5.5% in order to try and tamp down inflation. So if inflation does spike again, which we are starting to see it trend higher, that can be a huge problem for the economy. The next thing that I'll point out is junk bonds, right?